Good morning, everybody. It is Monday, August 29th, almost the end of the month, running into Labor Day this weekend. Let's get started here. I want to walk through with you how to use the screeners at TradingView a little bit for the purpose of selling puts and covered calls. Now, I have a number of lists in the screener, which you can find product screeners, and I'm updating them right now because I haven't done it in a while. So I have to get rid of some things. But when you use the screener, you can decide what you want to screen for. So right now I have a list, my ETF favorites, which I'm probably missing a dozen ETFs right now. I have to put those in and take some other ones out. Check here, put the color you want to screen for. So everything on your list, you just put a little flag to indicate what list it is. It takes a couple of minutes. They don't have a better way of doing it because the filtering system gives you all these choices, and they don't have in here right now something that just says my list. They are adding it at some point, I have read, but I don't see it yet. So once they have something that says my list, you'd probably be able to just drop down ETF favorites or very short lists or plug and play growth or whatever it is you are calling your list. Now, we have a pretty wide range of ETFs, and as we know, we like to screen, look here, on the weekly time interval. Why weekly time interval? Well, it's because this measures the price of the ETF or stock or whatever you're looking at every Friday at the market close. And that has been historically a great way to do measurements for people who are looking for longer term trades and more definitive signals from the technical analysis and the quantitative analysis. As we know, when the relative strength index, and this is set to 14, I use 13. It's not a big difference, but after 14 weeks, you get a pretty good measurement. This is showing that all of these and a few more are oversold. You notice that this is below 30. 30 is kind of the demarcation line for oversold or overbought. If it's in the 30s and heading down, that means it's becoming more oversold. If it's in the 30s and heading up, it means it's becoming less oversold. And you can figure that out just by saying, okay, well, I want to take a look at a chart. This particular one looks like it's about done going down. Short run doesn't mean that it can't continue down. In fact, that pattern looks like it will continue down, almost like it should have a fall off the cliff moment, kind of like over here. And I don't even know what this is, FTSE European, which I don't really care about all that much, other than it gives me a broad perspective on where the market is. So if I were going to try to figure out what I thought a bottom was on this market, I'd go back to 2018 because that seems to be the emerging support levels. It doesn't look like we'll get back to those 2016 levels. And even the COVID crash, it's pretty unlikely that we replicate. So in this time frame, these last 4.5 years, and what we're looking for is what we believe is the relevant time frame to pay attention to. And it does look like this bottom in December of 2018 is pretty darn strong support for the stock market. COVID was a abnormality. I doubt if we would have gotten below this if it wasn't for COVID. I don't know that, but I think it's pretty strong based on all the money that the Fed has put into the system, as well as the other central banks. Can they wring it out? Maybe. Will they wring it out? Probably not. So if I was going to put in my horizontal line here to show where I thought support started, this big long line here measures volume activity. Usually the biggest bar is where you're going to get support, either above it or below it. I usually believe it's above, unless there's a long-term trend that says otherwise. I happen to color these dark orange. 1 point. And I just kind of want to know where this extension is. Where would the other support be? If this broke and there was heavier selling, then you have to exhaust all the sellers. That probably comes to about here, which just happens to be the bottom of 2018. So could whatever this fund is double bottom? It certainly could. It could definitely get down to 42, 43. In fact, I don't know that would be uncommon even, but I think it probably stays above the 2018 bottom because we don't have a COVID-like occurrence. And this area here, find my shapes, ellipse. This area here with the jitterbugging, as I call it, coincides with this bottom here. So as it came back off the COVID crash, it hit that line, bounced down, started to get through, retested, violated a little bit, but small violations are no big deal, and then it shot back up. So I could see this going down here and then getting really close to that red line again. Now, take a look at this. This is a pretty interesting jitterbug zone too, right? Right in there. So it gets close to testing, falls back, messes around with it, falls back, tries to get through, falls back, breaks out. So these two areas, pretty significant action, different sets of buyers and sellers who are setting the agenda at that time. So this is the people who set the base for the breakout. And this is the people that basically said, look, this is really what we think a bottom would be absent COVID. So if I were going to draw a little buy zone in here, I would probably go something like that. So from low 50s to low 40s, probably where this buy zone is. Again, supported by thousands of other investors think are important price levels. 2018 bottom, kind of getting back to normalcy after COVID. So as we go through the list of ETFs, looking for things that are oversold, see a lot of currencies, a lot of European, means that we should start paying attention to European investments to go long, probably not in the too distant future, by next year, maybe, could be sooner. I really like Germany, so it'll be interesting if we can get Germany cheap at some point. Start over here, go back to 2018. I like having a little bit of runway here to conceptualize and look for where are super important levels of support and resistance. So this looks like about right. We're below it. So are we feeling like Europe is going to have a COVID crash period? Well, we've already violated here, so we have to think that. It's a pretty significant break. It didn't bounce back up and stay up. It set a lower low here. So that's dangerous. Right about here, look, jitterbugging. Draw our lips so we can understand what we're looking at. But, right, that little jitterbug zone. So I think we're getting actually pretty close to a bottom in Europe, or Germany in particular. So we have to take a look now in the not too distant future. What do we want to do about this? Do we want to own some Germany? I prefer Germany to the European Union as a whole, mainly because they're an industrial powerhouse. And once they get over their energy issues, they're probably going to come screaming out. So when are they going to get over their energy issues? Probably not till next year, but the stock market is a forward-looking creature. So the price here is saying, hey, we're starting to price in all the negatives. Once all the negatives are priced in, you have to start thinking about the next rebound. So this is actually something that if you really wanted Germany in your asset allocation, you could probably start selling cash secured puts on this about now. So let's take a look at stocks. Well, actually, let's look at one more of these. We've covered this already, the VanEck Digital Transformation ETF, and we already have pretty good bottoming process going on. Turns out this should have been here, but we were close. This probably should have been here. So there you go. So it came down here to a bottom fishing price instead of bottom, tried to break out and couldn't, then came back down. And what is this highly correlated to? The digital transformation ETF is highly correlated to Bitcoin and some of the various companies that are heavy in Bitcoin. So Mara is a top holding here. Square is a top holding here. A number of others. Oh, how's that for correlation? So this is why I say you don't necessarily have to buy 6 or 7 or 8 individual blockchain related companies. This particular ETF has about a dozen companies that are all leaders that make up about 70% of the portfolio. So this is one of those cases where you can use an ETF to get a really good basket, a basket that makes sense for what you're trying to do. So the companies in this ETF cover Bitcoin miners, companies that handle security, companies that handle transactions, companies that handle investments. Coinbase is in here. So it's the whole run of what makes blockchain tick and who's using it. The correlation here is, it's got to be almost perfect. So this whole basket looks like this. If we pull it up individually, we can take a look at the holdings again, which I did in an article for you 2 weeks ago or a week ago. It's pretty recent. You take a look at the top 10 holdings. It's Marathon. It is MicroStrategy, Sailor's Company. It is Riot. Let's see here, what else? Coinbase and Hive, which I really started to like Hive. I think Shooter likes Hive a lot too. So let's just leave it at those companies. This is what charts are really neat for. Just look how correlated that group is. Do you really need to pick them out individually? No, you can just buy DAP. Now, I think that DAP is cheap as it is. I think it's clearly in the buy zone area. Let's get rid of all these lines. Actually, I'm going to leave those up there for a while. I think that's kind of neat. And let's try to figure out, okay, what is a good way to buy this? Go down to Global Trends, ETF, take a look. Look, is at $5.99. Oh, I probably bought this today. I had a limit order at 6. Okay, take a look at the options. And this is something that you should have a starter position in at least. I'm up to basically a full position if this hit for me today. And I've been selling the December puts, the $6 and $7 puts. So you can get 75, 80 cents, ask for 80 or 85 or even, ask for the ask or a nickel or dime above the ask. Always ask for extra. And then you walk it back a nickel at a time, maybe every 20 minutes. And when you get down to about 80, 85 cents, maybe even a buck, depends on you. Just change it to a good till cancel order and let it sit and see if volatility hands you a little bit of extra money. So when you sell cash secured puts, remember, you're trying to get as much as you can. You don't just look and see the last price. Oh, it sold for 75 cents. I'll put in my order at 75 cents. No, put in your order above the current ask, no less than the current ask. Then take the time to walk it back until you get closer to the bid price, but don't really ever go down to the bid price unless you're just dying to have it because it's a big down day or something. Use the volatility, use the wiggles in the market. And remember, market makers, they see your order. So if you're within a nickel or a dime, they're going to find a way to make that trade. You know why? Because they make money when they trade. So you don't usually have to go all the way down to the bid. Within a nickel or dime, you'll usually get. Just set it for good till cancel, and very often the next day on the open, you'll get it. So I want you to get in the DAP because this is kind of your one-stop shop for blockchain investing without having to be an expert, without having to do all the research on one company. And now you're getting basically all parts of blockchain in one ETF. And it's concentrated enough through a dozen companies that, you're still going to get a ton of upside. If blockchain goes to 100,000, which I believe that it will in the next 2 to 3 years, this is probably going to go up 2, 4, 6, 800%. I don't know. It's going to be huge. Bitcoin is at about $20,000 right now. So let's add Bitcoin. I usually use the 2. I like the front month. So where did that go? There it is. That color right there. So again, incredibly correlated to Bitcoin. If you believe Bitcoin is going to 100,000, like I do, you're basically right on top of a buy right now. Scale in. I think that Bitcoin is actually going to be between 300 and 500,000 by the end of the decade. Blockchain, which is already being used by the oil industry, transportation, logistics, a lot of companies and a lot of industries are already using blockchain technology. So this isn't just about Bitcoin, but it's largely about Bitcoin because Bitcoin is a proxy for blockchain in general, just like Ethereum is as well, which is almost doubled now since its bottom. You need to be in blockchain. It's part of the fourth industrial revolution. This ETF, I think, is the best way to do it. It gives you basically a dozen stocks, and it's actually 30 or 40 stocks, but a dozen stocks make up 70% of the fund that are leaders in the industry. And you can't get caught holding, I picked out 3 and one of them went to shit. This is a lot safer way for you to do it, to get into this area. And it's an area you need to be in because it's maybe going to be the second or third fastest growing thing out there because digital contracts are coming and blockchain is the backbone for that. All right, so let's take a look at a couple of stocks now. Same thing. I'm going to pull down one of my screens. This is Russell 1000. This is the entire Russell 1000, 951 matches. I guess the filter lets me do that. And there's not a lot that's oversold yet, but there's a lot that's getting there. The red ones are companies that have been on the VSL for me or are on the VSL. So like Exact Sciences I took off recently, but I leave the tag because I just want to keep an eye on it in case I put it back. Exact Sciences I've been back and forth on. For me, there's probably a little emotion there because that's where I made most of my first million. The Chihuahua is back. So I turn off the thunderstorm. Actually, I think he must have been here the whole time. He just tried to get out. All right. So you go up the list, and what do you see? You see Intel and Warner Brothers Discovery, which were the two that I recommended you get into last week. So if we take a look at Warner Brothers Discovery again, we see that it hasn't really done too much yet. Get rid of all this stuff, all my compares. Here we go. You take a look, still bottoming out, but it's flattening. So apparently this should have been here. I apologize for being imperfect. This one should have been here, probably, and the buy zone should have been here. I think you are getting a screaming bargain on Warner Brothers Discovery right now. I think you should buy it. I think you can sell some cash secured puts all the way out to making this a potential double position. So I would own 3 to 4% of this in your portfolio, unless you're doing the entire basket of communication stocks, which is Comcast and AT&T, Netflix, the whole basket, but and Paramount. So I like Paramount, Comcast, and Warner Brothers Discovery the most. Again, why? Because they have the content. They have different ways of making revenue over the next several years. Paramount has just a great franchise all around. They really have everything from sports to news to content. They have a pretty good relationship with Amazon and Roku and everybody else that's out there that's a streamer. They have all the relationships, your cable packages. Warner Brothers Discovery just did the very synergistic merger. And Comcast, which is about twice as big as Netflix, has a strategic transaction coming. I don't know what it is, but the one that makes the most sense to me is, of course, I think they're going to buy Netflix, in which case they get beat up a little bit. But in the case of Warner Brothers Discovery, look at this, how it's hugging this line down here. There's just not a lot of sellers anymore. Who's left to sell this stock? Almost nobody. So as they cut their expenses and revenues keep going up because of global expansion, some point this turns up, and I would think they'll make a run at this top. Now, will it get there again? I don't know. I mean, maybe it's something it gets to and bounces off and finds a home in this area in the 40s or 50s or 60s. But from 13, I mean, you're getting a heck of a price, and I think it probably does set new highs, and I think it probably makes a run at 100. So now you take a look at the options here, and they're probably going to be the same ones I recommended last week. Push us out to, say, December. I'm not looking at last week's article. What did we say last week? Last week we looked at November 1250 puts. No, December 1250 puts and November 15 puts. So the November 15 puts, if you put the order in last week, you got it put to you. You got your trade executed. I think you can skip that one at this point. Just buy the stock, then sell the December 1250, and you get about $1.30. Put your order in $1.35 or $1.40, see what happens. Go back to the handy dandy screener, and let's just look at our stocks here for a second. So I did the red tag, which shows just my stocks. Intel, Zact, I don't want. Zoom has been super interesting to me. I've sold puts a couple times. Teladoc, super interesting. I got some puts outstanding. Cognizant is India. I keep track of that. So Kohl's is the one that I talked about just a little bit last week. And I don't think it's bottomed yet. I think there's a lot of pain to come. You'll notice that with this one, I did actually set the prices a little lower than some of the other charts. Other charts, I gave them the benefit of the doubt and turned out to be wrong by about one increment. Let's move this here. Move this here. There you go. Go back to 2018. With these guys, I think the relevant area, hold on a second here. Do I have the right one? All right. My chart looked funny. I wasn't sure why the line didn't extend. All right. So historically, you take a look at this. It's in a pretty strong area right now, but I think it's about to violate because there's just a lot of hate. The guy at Hedge Eye is beating up on this one a lot, trying to get people to sell it and short it. So they're trying to push it down in here. I don't want this yet. Not really sure why everything's looking funny here. Go back to 2018. I think Kohl's is probably going to have a COVID-like bottom again. I think it's going to get back in here. And that will be when we want to get in. And why do we like the Kohl's story all of a sudden? Anybody remember? It's because of the real estate, right? A couple people knew that. So here's the thing with Kohl's. And again, I understand that I say a lot of things about a lot of companies. And it's because I spend a lot of freaking time reading about them. Oh, I had it right here. At some point, Kohl's is going to develop their real estate. Macy's is almost all mall-based, isn't it? Somebody says Macy's has similar real estate. I'm not sure that's true. Macy's is in giant buildings and malls, I believe. I love the Manhattan store, right? The Manhattan store is just outstanding. It actually made me like shopping. In any case, Macy's is one that is interesting to me. We have a couple in malls here. I'm not sure if that's the same all over the world. Kohl's has built their own boxes all over the place, and they own these gigantic parking lots that are like only filled on Black Friday. That's it. And I think they have a sale once a year. So they have these giant parking lots, and they're starting to develop some strip malls around them. But the whole mixed use concept, right? The mini downtowns, the mini town areas, that was one of the things I talked about with a couple of the giant private equity type investors here that invest in Milwaukee real estate and Midwestern real estate. That concept's just going to keep developing all over the country. Areas that are walkable for 90% of what you need, so that you only have to drive around when you really have to drive around. Grocery store is a push cart away. And, honestly, who's not ordering their groceries online yet? If you're not ordering your groceries online, at least for your big trips, I don't know what you're thinking. I ordered and actually paid $10 for the delivery. Did a couple bags of groceries delivered to me at my daughter's house when I was babysitting. She didn't have apples. She didn't have bananas. She didn't have milk. She had finished everything like the day before I got there. So I'm there with 2 grandkids, no apples, no bananas, no milk. That makes for a very irritated grandpa. So I went on the phone, beep, 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 beep. Ordered a dozen things, got some eggs and bacon and chicken sausage and some other things for the house for the next few days. It got to me within 2 hours. Got to sing the apples and bananas song because we had apples and bananas again. Had milk. I mean, it's just future of grocery is amazing to me because you'll only have to go to the grocery store like if you really want to pick out produce for that next day or two, or pick out a piece of meat for the next day or two. In any case, back to Kohl's, which used to be a grocery store chain. I think it's going to fall down in here again. And at that point, they're basically valuing the real estate at zero, or maybe that's what they're valuing the real estate at. The rest of the company they're valuing at zero. Here's what's going to happen. Kohl's is going to get involved with developments, and this is how the development will be done. They won't have to contribute any cash. Their contribution to the developments will be the land. So if they have $1 million piece of land and it's going to become a $30 million building, they're going to take empty land and end up getting 3% or 5% or whatever the deal ends up being. They're going to get a proportional share of the deal. If they have any negotiating skills at all, they'll do very well. And by the way, now they'll have hundreds of people living walking distance to their Kohl's store, which has a Sephora and Amazon drop-off. So I really like Kohl's because I know certain people have been telling them this is what you ought to do. At some point, the board either tells the CEO, you really ought to do this, or we can find somebody else that will. Maybe the CFO has to get some spleen in too. But there are activist investors already in with Kohl's. So I'm not quite ready to pull the trigger because I think it could get down into the teens, but we're getting pretty close. So this should be on your radar. What else? Not much else. Comcast. I think I have Comcast up already. So you take a look at Comcast. You say, okay, is my chart right? And it appears I might be off a little bit. So take this line, bring it to there. Now it looks a lot smarter, right? Pull those out to 2024. Get this 2018. Look at that jitterbug zone. Breaks through. So this line right here really has become very supportive. So it's probably going to close into middle low 30s. And then you probably get some news of some sort. Some activist investor gets involved. Roberts goes out and buys Netflix, which might push a stock down temporarily. But if you combine Comcast and Netflix, oof, what a powerhouse. Pricing power goes up for the whole group. International expansion grows even more. And that is something that I think everybody's missing about Paramount, Warner Brothers Discovery, Netflix, NBC Universal. Because of the content libraries and now the technology making it easy to do, and global middle classes becoming middle classes, there are literally billions of people that they can sell content to now that they couldn't do just 10 years ago because the technology really wasn't there. But streaming is global. And if AST Space Mobile makes 5G to a handphone, to a cell phone real, Starlink is already doing it. If you have their satellite set up, so you can still hook it up to your TV and your computer. The technology to distribute this content is almost everywhere now and will be everywhere in the next several years. So this is probably a very long-term bottom that we're setting in these communication companies, and you need to be getting involved. My limit order on Comcast is at 35, not quite there yet, and I've sold some cash secured puts already. So I already have a starter position because my $45 puts got put to me whenever that happened a while back. So if you don't own Comcast yet, you're very close to your first buy. I set the limit orders at 35. And then after that, probably sell puts. If those get put to you, great. And if they don't, hey, you have some money in your pocket. All right. One other company of note, Azure Power, really had some weirdities the last couple of days. The CEO who had been there for 7 weeks resigned, and he went back to his old company. I have no idea what happened at the other company. They probably said, hey, we want you back. Here's a lot of money. That's my guess. So this is, he went back to IndyGrid, which is where he came from. Not really sure. So Azure is having a couple of issues. Filings were delayed. A whistleblower complaint about some irregularities at one of their projects. And they had some positive legal findings around the world, in India and in Singapore. So this is a company, Azure, that is one of the fastest growing alternative energy companies in one of the fastest growing alternative energy markets in the world, in the second biggest country in the world. I think, and this is 25 years of experience, I think that they're just running into the same types of hiccups that fast growing companies run into, right? It's just ramping up so fast that they're having hiccups, and they have to tighten their controls. There's no doubt about it. They already know that, and they're working on it. And the interim CEO, Rupesh Agarwal, actually is an incredibly qualified guy. So he was in the running to be CEO before. My guess is that he ends up being the CEO or the COO. So they'll add another top executive here shortly. And I don't know if it'll be underneath him or kind of co-CEO. I don't know how they'll do it. But this is still a great company, and the stock just fell off the edge. I think if you haven't bought this yet, here's your chance. So this probably should have been there. That probably should have been there. That probably should have been there. There you go. This is the dump. It's already off its bottom for the day. So if you don't own Azure, I'd say buy it now. You at least get a starter position, then watch it for a while. I don't think I want to mess around with the options just yet, but it's not going out of business. They have all kinds of liquidity and money, but this is just one of those I hate it events, and the market is saying I hate it. So what do you do when everybody else panics? What should you do? If you like the company long term, you buy it. I really like this company long term because it checks all the boxes. It is in a huge secular trend to the upside. It is a leader. It's got government support. And now the technicals are basically saying this is capitulation. Now, I don't want a giant position in this company because I own EMQQ and a couple of other emerging markets. So in the context of having 15 to 20% of my money in emerging markets, which is what we talked about a month or two ago, I probably have room in my portfolio for a 2% position here. You could probably go to 3 or 4% with the idea that when it gets back up to here, it starts hitting some of these resistance areas, that you take your, sell a third or sell a half of your position to pull it back down to, 2-ish. Because I don't know when this is going to happen again. I think that was a little obnoxious. But this area here, see where the jitterbugged, I think that's probably a good resistance area. I think it probably gets back to 20-ish next year or two, and then you cut back your position. I wouldn't bother selling puts on it anymore. I would just buy it. So if you have a 1% position, go ahead and make it a 2% position. If you have a 2% position and you're aggressive, go ahead and make it a 4% position. And then just remember, I got to have an exit strategy when I get up here somewhere for at least some of my shares. All right, let's call it a day. Working towards getting these edited, while the market's still going, and getting them out at the end of the day. That's why we moved to both the Monday and the Thursday webinars to noon. That way I can have these up for your viewing enjoyment in the evening when you get back from work if you didn't get to watch live. I had a great turnout today, though. I guess the last word would be 2 weeks ago on this program, I told you to hurry up and wait. I've put out like no recommendations since because I told you the stock market was going to fall again. It's going to be rough, I think, until the Fed hints that it's going to hint that they're becoming satisfied with the progress on inflation. I'm going to write an article this week. If I can crank it out today, I might do it today because it's timely. I'm a little worried that central banks are going to create a hole that doesn't need to be created. And since we just had Jackson Hole, I'm going to use that in the title because it'll catch some eyeballs. The thing I worry about is that the Fed and the other central banks over tighten. I don't think that they should because I think that the supply chains should catch up with demand. There is no reason to beat up demand in a world where people still want stuff. It's not like we all have an ATV. It's not like we all have everything that we want. It's not like we have a sports car. It's not like we have all the clothes we want. Very few people. If you're not a 10%er, there's still a lot of stuff that you need and want. So beating up demand is a horrible idea. It doesn't mean they won't do it. We should be focused on increasing the supply side again, and not through tax breaks, but by encouraging certain types of investment, which we just did with the clean energy bill. Yeah, they call it the Inflation Reduction Act, and it is because the more energy that we have, the cheaper everything gets, right? It's a follow-on thing. If energy is cheap, then making stuff gets cheaper. Growing stuff gets cheaper. So these are all just cyclical things in the big, long secular trend upward on standard of living that's being driven by the transition to cleaner energy and the fourth industrial revolution, smarter use of real estate, all that good stuff. Be prepared to be a big buyer here in the next 4 months. That's my message. And we're getting very close to cheap on a lot of things. Just going to take one more dump. The way Azure dumped today, when other stocks dump, that's when you have to start looking at them because they're getting close. They're not oversold yet, but they're getting close. Micron, oof. Would you love to own Micron on the cheap? Not there yet. Not there yet. Who even cares about that one? Not there yet. So put in my guideline here. I'm going to edit this out, but right there, that one's neat. I'm going to pull this down to here. Probably that one. Look at that. I guess it could be that. You would have to have a very recessionary event, which could happen, right? To really get down to low 30s again on Micron. But boy, wouldn't that be nifty? You have to buy that one with both fists. Remember, part of an oligopoly. Yeah, I'll save that chart. I like that one. So bottom fishing on Micron at 33. I think that's probably right. Man, if we just get capitulation moments, a capitulation month, that would be outstanding. And all this stuff that was hard becomes easier again. All right, take it easy.